How's it going, everyone? It's Sam. There is a big move happening over the last couple days, over the last week. A lot of the Mag 7 have exploded. Like Amazon had a 15% day, Microsoft had a 17% day, and Google had a couple big days, even though they weren't even announcing earnings. Meta, same thing. There is an interesting thing happening today, though. Google is down 5% as major leadership changes hit DeepMind. This AI revolution is moving so quickly that there are just massive opportunities because there's stupid market movements. And I want to just hit on that for a couple minutes today. We won't spend too long on this video, so hopefully you don't get any mid-roll ads. But yeah, the market's looking good. I mean, sure, we're down slightly right now, but the market was really green earlier today. We've moved up so much in the last week. It's nice just to see like us holding gains even with S&P 500 basically zero for the day. Um, I mean, it's up 1%, 2% over all-time highs. Over the last 5 days, it's up 5%, and the S&P 500 is up 5%. Um, there is some euphoria. S&P 500 call options volume hits an all-time high. Like 10% higher than any other day that we've ever seen. 4 million S&P 500 call options were bought. Now, with this kind of euphoria, there are a lot of people that are going to get screwed, and there are a lot of people that will make a lot of money. Now, I think generally, if you're buying options, it's not great. I would rather be the one selling options. If you don't know the difference, like one is taking the smaller bet that something that probably won't happen will happen and they'll make more money. The other side is making money the majority of the time, and you know, basically taking a guaranteed amount of premium. So, like, there are various ways to use options, but like I just don't think that buying call options a lot of the time makes sense. You should be stacking long-term portfolios, and maybe you sell some cash secured puts or something, meaning basically I'll buy this stock if it goes down further. I think that's a better side of the option to be on. But it's interesting because we have this euphoria, and at the same time, I just saw Google shares down significantly, like out of nowhere. The market kind of turned, and Google's down 5% as major leadership changes hit DeepMind. Demis Hassabis will step away from his day-to-day CEO role and become chairman. The chief scientist, Jeff Dean, is leaving Google. Dean plans to launch an AI startup focused on scientific discovery, and the stock falls down 5%. It's funny because like there have been a couple people that point this out, but I think Google is valued where it is, along with the other Mag 7, not because they have the best AI in the world or that they have the best researchers. It's because they have massive distribution. Like whether it's Grok or Claude or Gemini or ChatGPT, like it doesn't. I don't think it really matters that much. I think these are all going to be commodities for the most part at the end of the day. Sure, some are better at some things than others, but like if the head scientist walks away, is that really going to change too much? Like, is that worth hundreds of billions of dollars of market cap? I don't think so. So I think when we're in this time of really high volatility because we don't really know how to value AI and all the spend that's happening, there are opportunities that pop up. They're just stupid. I'm not saying like Google's this unbelievable opportunity today because it's down 5%. Like, I think it's pretty fairly valued. But the fact that Amazon and Microsoft and Meta were just all 10 to 20% lower a week ago, like there's massive opportunity there. That's why I had been piling money in basically over the last year, maybe a year and 4 or 5 months since the tariffs. But sometimes I was piling in money more heavily than others. But I've just been piling money into these assets because I feel like they were just undervalued compared to a lot of other assets that were racing up that I just thought were at stupid valuations. So yeah, I think there's still opportunity today. Now, where am I seeing the opportunity? Well, I think Meta is still a huge opportunity. Obviously, Amazon and Microsoft and Google have all moved up a decent amount in the last week. I mean, Microsoft was at 350 something dollars in the last couple months. Amazon was under 200. Google 300 or 315 recently. Meta still, I think, is relatively cheap. So I'm holding these. I still think they'll outperform the market over long term, but Meta, I think, is actually cheap. Now, do I feel good about buying it? No, because it hasn't had the pump that the other ones have. Like, there's subconsciously, it doesn't feel as good to buy something that everyone's not as bullish on. But the fact is, they're still growing revenue quite quickly. I think there are some things that Wall Street doesn't like that they're going to clean up over time. Whether it is, their metaverse that they're spending money on, whether it is that they don't have a cloud business that they can see the growth like they can on the other three that I've been talking about. Whether it is that they can't show the exact dollar amount that they're getting in return on spend on AI, like all this stuff. I think once a market starts liking Meta again, all these fears will go by the wayside and it'll be priced over 700 again. So I think it's at a pretty good valuation right now. You could look at the AI players too. I have some call options I bought months ago. I think I made a video on this channel about it. On Nvidia, when we fell like to 205, there's a big red day. And I trimmed those positions a bit today. But yeah, like there are AI companies that are still relatively cheap based on PE and growth rates, but I'm not feeling like I really want to pile into those because I can't model it out as well as I can Amazon, Microsoft, Meta, Google. They don't have the distribution. They have a few clients that are the majority of their of their spend, and that's fine. Like that's because the clients love them and love their product, but it's just I think much more volatile and not exactly where I want to put my capital. Um, there are assets that I bought over the last year that aren't sexy at all, like Mastercard. I was buying this under 500. Now it's 570. It's moved up 15%. Um, yeah, so like there are assets like that that you can buy when no one wants them that are just kind of cheap and aren't that risky. I mean, people don't really like Netflix right now. People don't like Uber. Both of those are in my portfolio. Uber, I need to look through their earnings a little bit more. But yeah, they're down 7%. Not the craziest growth over the last quarter. So people don't like that. I need to look at this a little bit more. But the underlying company seems to be doing pretty well. People are worried about autonomous driving, but I think they have the distribution, they have the clients that want rides. So I think a lot of robotaxis will probably use Uber over time. Let me know your thoughts on all this underneath the video. I think there are still companies that the market just doesn't like that will probably outperform the market that are safer than a lot of the stocks that people are buying today. Let me know your thoughts though. I appreciate it. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.